Hello Vinod. So this is your question, and you said that you found a reverse divergence and you think it works better on levels of 60. And you attached a chart of Bank Nifty where you described this as reverse divergence. Now keep in mind that this is probably the worst interpretation of what I have taught, because this is nothing like what I have taught in course. Look at this. Here you can see that I have clearly mentioned that reverse divergence happens when the trend channel alters, and there are two types of alterations. First is change in range and second is break in range. Now let's see how you interpreted this. This is daily chart of Bank Nifty, and as per you, this is reverse divergence. Now where do you see the change in the range? There is no alteration in range. I don't know from where you got that, because nowhere in the course I mentioned that. Look here, I have even provided you diagrams. The first is break in range. This is the first type of reverse divergence and it is the weakest one. So take a look here. This is what is reverse divergence. The range should break, price should go above and then come down. So can we see a reverse divergence here? The answer is yes and no. The reverse divergence is yet to form. Here we can see that this is our trend channel. So if price comes back at this level and then RSI comes down, then this will qualify as reverse divergence. Now your problem is you are too much obsessed on indicator, and how many times I have told that indicators are only as important as your basic concepts. Indicators as assisting concept, they cannot replace the original concept. Always focus on a trend line, support, resistance. You have to at all cost have good understanding of these things. Without them, no indicator is going to work. So now what you see is that here is our trend line and the prices are actually moving up, and here you can see the RSI falling. Now what is this? This is a regular bearish divergence formed in a confirmed uptrend, which means if this line breaks, then we might get a retrace. And how you are going to trade this? By going to the child time frame. Now if we expect that this is your grandparent time frame, then our child time frame would be 15 minutes. So here, when this line will break, we can expect that we will get a good retrace. And at what level, until what level that retrace can fall? It can fall to this trend line. So if any down momentum happens, we can expect that it can happen to this level. What you give me here is by no means a reverse divergence. It is a regular bearish divergence formed in a confirmed uptrend, and therefore we can see a retrace. If you want to see more example of reverse divergence, then we have a lot of them on Bank Nifty, and I will show you here. Look here. This is again, we drew trend line. This became our trend channel. Here you can see price moved up, and here we got a reverse divergence. Actually it didn't touch the level, therefore we cannot say that this is an actual reverse divergence, but it is close to what a reverse divergence should look. There might be more examples here. Now here we can see that the price went above the above channel and then broke above it and moved up. This will not qualify as reverse divergence. On other hand, it will qualify as strength signal, because here you can see the RSI is respecting the movement of price in similar way. Same we can see here. Again, you can see that we can draw a trend line here. We will clone the trend line to form a trend channel. Again, we see price broke the channel, moved up, came back here, and during the same time you can see here that we have a reverse divergence. Now reverse divergence has to be traded on the lower time frame and not the parenting time frame. Always keep in mind the name of the indicator and the concept pretty much tells everything about what is happening on chart. In fact, this is what you are seeing here is also tradable with help of moving average. 1 hour. So what we will do is, first we will try to represent this trend line with help of a moving average. So here I have already created a moving average. Our first task would be to represent this trend line with help of a moving average. So I will try to represent it. Keep in mind we want a close representation and not the accurate one. Now this moving average is acting as trend follower for current trend, and it is also representing the deceleration of current trending price move. So if price comes below this level, then the same level which was acting as trend line for this will act as fast follower for the new falling trend. So if price will start falling down, it has to respect this moving average. So if it comes down and goes here and ends up respecting it, then you can expect a good price, and then you can expect a good fall. And since this is a counter trend move in an uptrend, you are supposed to be booking profit sooner. So keep in mind, master the concept first. If you cannot identify what is direction of trend, then you practically cannot trade in that direction. As I stated earlier and several times in the course, look at the base concept. Trend line, support, resistance are more important than indicators. Indicators only help you improve the quality of your trade. They cannot replace the original concept. I hope that helps.